Today we are here to discuss our upcoming NFO.
Hi, Karthikeyan. How are you?
All good, all good. How are you?
I'm doing very well. Thank you so much for joining. This is Brijesh Dalmia from Masterstroke, and
Absolutely.
I will be your host and asking you questions today. And thank you so much, Birla Mutual Fund, and you agreeing to do this uh, event with us. So, just a brief about us, Karthikeyan. We are from Masterstroke, and we have a digital platform where 2,500 mutual fund distributors have a paid subscription to use our services of portfolio research, client communication, and events like this. And today, some of our esteemed partners have joined this event, and we thought we would like to know more about Quant and your upcoming NFO.
Right, right, right. Thank you so much.
Yeah.
Right.
So,
So,
yeah. So,
yes,
the first question, Karthikeyan, uh, I want to start from the basic for myself as well as the participants. What is quant investing?
right, right. So, in one line, if I can say, it is using technological leverage for your investment decisions to make better investment decisions in terms of either it can be in terms of generating higher alpha or excess return, or it can be in terms of risk management, or it can be used for both. So, in fact, in all, it is using technological leverage, but just technology using technological leverage can mean multiple things. It can mean just mindless technicals as well, right? Mindless pattern hunting as well. So that is not what I mean when I say using technological leverage. It has to be also in form of scientific ways in which we are carrying out our leverages. So what we mean when we are saying our quant, well, primarily what we mean is first of all using scientific inputs and scientific methodologies of making use of technology in terms of the inputs, what it is that we are trying to feed to the machine. So first of all, our objective has to be clear, what it is that we want to achieve, and what it is that we are feeding to the machine, and how we are processing that um, information, so to say, in order to reach where we are. So what we are feeding is factors. If I may say, factors are something. So there's two things in the world: correlation and causation, which machine can take as the connection. So it is all about making connections, right? What happens, then what happens, what follows after, right? So correlation can be anything. It does not necessarily mean that one thing is the reason for another thing happening, right? Like election season was going on, and a lot of political party leaders were doing their rallies, and simultaneously the temperature was going up. Now, if a purely correlational angle, if I can say, so there will be a correlation that would exist between the number of participants turning around in the rally and the temperature. So a machine, a mindless technical can say, because due to more rallies are happening, this summer is recording higher and higher temperature, but that is simply not true. Similarly, if I can say, there's a lot of what do I say, bogus technicals. When I mean is the graph that I'm looking at mimics a W and then it followed by a V. Then the next time when it will mimic a W, it will be followed by V. There's no reason for that W or V to be there. It is just a coincidence. So we are not talking about coincidence. We are talking about the reasons or the factors which are behind. And in just like in physics, we start out with timeless fundamentals as in the building blocks, what can be the building blocks of it, and there it is, the three laws of motion, right? Now those three laws of motion are more than 400-year old. So somebody can say no new developments have been happened in the field. So that is simply not true, because the foundations or the founding principles are usually timeless. It is just like humans need to eat in order to generate energy and to survive. And it is not fair to say it has more than 70,000 years have passed since Homo sapiens are roaming the earth and we are still eating the food, right?
So I have a question in between. Sorry, Karthikeyan. When you say this correlation, so who feeds these numbers? So there's a human interference there. You write the program, or you let or there are pre-made softwares and programs which give you the number. How does it work?
Right. So it is 100% proprietary. But of course, we will need some basic data collection like we need from Bloomberg, because we are not the data collector ourselves. So we will need data, and we will need something to run it on, but it is not a third party software. Just like Excel, I need some basic software to see it and to do some sort of stuff on any sort of data. Just like Excel, we use Python, which is free, which is open source, and it is as basic as Excel, right? So there is no specialized software or a proprietary software or a third party dependency that I'm talking about here. We have entirely end to end proprietary model. Every nut, bolts, and screws are made by us.
So when you talk about this proprietary tool in quant investing, so you are coming out asking investors to give you money, and you say that it is based on various factors which are prefixed. Will you
Right.
change factors going forward, or in quant investing, once you have declared that this is your model, you don't change? And if you change, what kind of communication goes to the investors, MFDs?
Right. So, of course, the evolution or the tuning, fine tuning in the model will be going on, like it's a need of evolution. So, from evolutionary point of view, yes, of course, there will be modifications in the model as we go forward, and that is the whole objective of this merging passive versus active. Right. If we go static, then we stop evolving, and this evolution thing goes for a toss, and which is kind of a drawback of the passive ETFs, if I can say. Who is creating those rules? Who is making those rules? And how, when, if the time demands it, those rules needs to be modified. We don't know. I don't know. I sat beside NSC building for 3 years, and I don't still don't know who is the person that is making. Right. So yes, of course, we will be evolving. But in terms of factors, if I say, can I change factors? So the factors are only five, four, five fixed factors are there, which are for more than 40 years have been going on, and those 4 5 factors are the founding principles of quantitative investing. So when saying can we change factors, so there are no more factors to operate on, right? It is like the ingredients. So whatever ingredients we have in our basic food, the ingredients will remain the same, but the recipe can vary to when I go from North India to South India, east to west. There are n number of recipes using the same ingredients. So the ingredients are timeless, and that is why I say the thing that we are feeding does not has to be correlational when it has to be causation. So those kind of correlation relations should not only appear today, but also 10 years from now on, 15 years from now on. Otherwise, there is no repeatability to it, right? We are just chasing coincidences. So the fact that is why we our starting point is factors, because those are timeless things. Yeah.
So फॉर द बेनिफिट ऑफ माय पार्टिसिपेंट्स, आप ये कहना चाहते हैं कि अगर प्राइसेस बढ़ गए, ईपीएस ग्रोथ आ गई, प्राइस मल्टीपल बहुत ज्यादा लेकिन हो गए, और आपका मॉडल कहता है कि इतना प्राइस मल्टीपल नहीं होना चाहिए, तो यू विल एग्जिट. दिस इज वन ऑफ द फैक्टर, फॉर एग्जांपल. So,
Right.
markets mein there are so many quant funds, and you said that the principles remain the same. The ingredients changes a little bit, flavors changes. So, what is different for quant Birla quant funds versus other quant funds in the marketplace? How should an investor or a mutual fund decide which one to go for and why?
Right. So first of all, when I say quant, so one of the things is of course the starting point, the factors or the scientific principles behind it. The second part is how you combine them. So usually in the market, the practices are is कि हर चीज को Z score में convert कर देना and then उसको mix कर देना. So let's say I have to drink lassi and I have to drink chach, and I drink all of that simultaneously, and it gives me benefit of none of those. I am neither drinking this or neither drinking that, right? So the that kind of stuff I see a lot in quantitative framework. कि, मुझे quality को mix करना है, then I will take a score of return on equity, let's say, and I have to take momentum, then I will take momentum score, let's say, and I will add those up, or momentum or ranks, I will add those up. So what can happen is, first of all, we don't know anything about the return on equities distribution. We don't know anything about momentum distribution. When I'm superimposing those two distributions, I'm automatically making an assumption that these are normally distributed or some sort of distribution which are additive. And if I superimpose those, the stocks which are coming on top of the superimposed or the resultant distribution is the good one. What can happen is one is good on this front and bad on let's say momentum, let's say quality. क्वालिटी में अच्छा है बट वोलेटिलिटी में वो चीज खराब है एंड दोनों मिलके समवेयर इन द मिडल आ जाता है एंड इट क्वालिफाइज एज so to speak better or relatively better than it actually is. So the way we combine is we combine in that particular sequence so that it is not an or condition, it is and condition. So it is good on this, it is good on that, and then so that is one departure point. The sequencing. So we have taken a step down. People think that a better
But again,
evolutionary
people are
step.
saying Hindi English mix ज़्यादा अच्छा रहेगा, तो maybe you can mix a little Hindi English.
ठीक है. If people are comfortable in Hindi,
No,
I
Hindi
can
English
explain
mix
it.
करना होगा because South India से भी है, North India से भी है, तो half
Okay,
half
okay.
चलेगा.
Okay. Right. So, it's like adding things which are not additive because we don't know. Like salt is important in our food, namak bhi important hai, and chini bhi important hai. Sugar is also important, but we don't mix them simultaneously, right? So usually that simultaneous mixture is what goes on in the market. So we are different in that front. Second, we are different in our disciplinary approach, right? So most of the existing funds in the market would be taking would be running quant not as a pure disciplinary product but more of an ad hoc or support to the fund manager kind of a thing. So there will be a screener kind of setting that I have these 70-80 stocks. Now the fund manager likes these 20-30 or 40 stocks as per his preferences, and that is what will go to the model. So repeatability comes when the discipline is there, right? All we are trying to do is to limit to what do I say? We are trying to cut the drawbacks of active investing and cut the drawbacks of passive investing and get the benefit of both. तो दोनों का अच्छा लेना है हमें और दोनों का खराब कट करना है, and that is where our quant is coming into picture, because active is there, active is the traditional wisdom style, passive is the there which is giving me the flavors of these factors that I talked about. So why is there a need of quant based framework in the first place, someone can ask, right? So active investment is full of greed and fear. I mean, and regrets with experience as well. So experience is a good thing. Experience acha bhi going forward. I mean, it helps a human to go on the learning curve, but sometimes it can be our limitation as well. For example, stock goes to 10%, let's say, right? And as a fund manager, book a profit. And then stock continues to go up and it goes to 25%. Now I'm filled with regret that if I would have continued with the same position, maybe I would have gotten 25% return. Now, the next time a stock hits 10%, I will be waiting for that 25%, and it can go down to zero as well. So, ये जो regret एंड हमारी फियर एंड ग्रीड से भरा की वजह से जो हमारा रिग्रेट आ सकता है, दैट इज वन एक्टिव मतलब बायस वेयर द फंड मैनेजर कम्स इन, राइट? फॉर एग्जांपल 10 साल तक, फॉर 10 years I had a very good experience with the stock, and now for 4-5 years it's not been performing, right? And now I'm having that bias because I got attached with its journey. Like for 10 years it has made phenomenal wealth for me. I know the management, I know the business in and out, and I'm just waiting for that turnaround, and it never happens. And finally, when I sell that position, the bleeding is too much, and I have lost that opportunity in terms of I could have parked that money
You
into
mean to
some
say there is no human emotion involved in quant investing?
right.
This
So
is
when here no human emotion is involved, and we are 95% what do I say, going by the machine, and fund manager intervention is only for liquidity management and for disaster control. No subjective intervention, no active calls.
ओके. एक इंटरेस्टिंग क्वेश्चन पूछना चाहता हूं मैं. ऐसा सोच कुछ म्यूचुअल फंड डिस्ट्रीब्यूटर्स रखते हैं, और पिछले 1 साल में 2 साल में जिस तरह के रिटर्न्स क्वांट बेस्ड इन्वेस्टिंग ने बनाया है, ऐसी फीलिंग आती है कि आपको पहले से पता है कब निकलना है, कब खरीदना है. मतलब वुड यू लाइक टू गिव एग्जांपल्स? मतलब ये सोच आती है कि ये स्टॉक लेना है और दाम बढ़ जाते हैं, और फिर फंड मैनेजर्स एग्जांपल देते हैं, ये स्टॉक हमने बेच दिया, उसका देखिए दाम नहीं बढ़े, इसको क्वांट इन्वेस्टिंग बोलते हैं. Is quant investing like this? I don't think so. What's your view on this?
Right,
That can you always
right.
pick the winners and can you always eliminate the losers?
Right. So that is actually not the case. What it is in the place is the ruthlessness. So if my machine says so, I am picking the stock, and yes, from probability angle, if I can say probability angle. So our building design is not from chasing return, but chasing consistency and chasing probability. So we have designed this product keeping that chances in mind. So for example, in the what are the key to successes in exam? तो एग्जाम में अच्छे मार्क्स लाने के लिए, टॉप करने के लिए, और जो भी है, मतलब बेसिकली वट एवर आई एम कॉलिंग सक्सेस इन एग्जाम, उसके लिए आई विल नीड फर्स्ट ऑफ ऑल इज बेसिक इंग्रेडिएंट्स हैव टू बी राइट, माय बुक्स हैव टू बी राइट, मेरे पढ़ाई करने का तरीका हैज टू बी कंसिस्टेंट, जो भी मैं मार्गदर्शन ले रहा हूँ दैट हैज टू कम फ्रॉम समवन, and on the day of exam I feed well, I rest well, and all that, right? Now, doing all that, do I necessarily guarantee my success? The answer is no. But do I get am I getting closer to success as I go through exams again and again, and if I'm continuously at that practice? The answer is yes. So what the timeless way of achieving success is to finding a good system and then sticking to it with good discipline. So it is not we are not trying to predict future, we are not trying to guess what kind of questions are coming in the exam. We are trying to have our study in place, our discipline in place, and whatever the questions come in exam, 7 out of 10 times we will be likely to manage it. So that is our main product,
Okay.
and return and volatility is kind of a byproduct that comes from that discipline and system in place.
So where will you place a quant fund? Between passive and active or much above the active funds?
Sir, I would say, like I said, technological leverage. So, and the recipe can be a lot. I mean, depending on what I'm making of it. So I cannot. I
Let's talk
I
about
will not
Birla
say
Quant Fund. Let's
generally
talk about
about the fund.
Birla Quant Fund. Do you expect Birla Quant
Right.
Fund to be between active and passive funds, or it will be a very active fund and very high volatility, very high activity?
Right, right. So in Bella, like we are not trying to replace active or passive here. We are trying to get best of both. So how are we getting best of both? So like machine has no intelligence of its own. So like our tagline is powered by tech but guided by wisdom. So where are we using that wisdom from? Is we are using that wisdom in terms of active management. Active management का कैसे ले रहे हैं is there's a Pareto principle or power law or 80-20 rule. That is also one kind of a timeless and geography-less, placeless kind of a principle, that 20% of your client are giving 80% of your business, let's say, if I'm talking about business.
Yes.
Right? So this kind of pattern, 20% of students are responsible for 80% of the marks, or 20% of employee are responsible for 80% of the company's output, right? Similarly, in asset management companies, लगभग 20% of the companies are responsible, 20% of the stocks have 80% of the AUM. So roughly 75 stocks in terms of number, if I say, रफली केवल 75 स्टॉक्स होते हैं जिसमें 80% किसी भी एएमसी का एसेट अंडर मैनेजमेंट पार्ट होता है. आई एम नॉट टॉकिंग अबाउट बिरला और आईसीआईसीआई इन पर्टिकुलर, आई एम टॉकिंग अबाउट ऑल ऑफ देम. I'm also talking about the firms in USA or Germany or France. So this kind of pattern will be there. But that 75 names will be our strongest convictions, right? It will be going through n number of subjective filters before we as an AMC park our 80% asset under management into those names, right? So those subjectivity, when I talk about subjectivity, so here we are not trying to build a machine which is expert in everything, but expert in what machine is expert at, and let's leverage humans where the humans are expert at, right? So if I talk about our left brain and right brain, actually man, so our left brain is very good at doing analytical kind of framework. Whenever I'm starting a business, where the returns will come from, where how will I manage inventory, how will I expand, how will, if a new competitor comes into the market, how will I manage, where will my customer sit, and all that. So that is very analytical and to the point kind of framework our left mind is very good at. Whereas when I'm talking about EQ or emotional quotient or emotional intelligence, our right brain is very good at taking judgments, taking subjective calls, right? Gut feeling, thinking out of the box. So those kind of thing active fund managers and analysts are very good at. So they are very good at, let's talk about quality. For example, some sector has return on equity as the best indicator of quality. Some sector might have cash flow. Some sector might have return on capital employed and all that, right? Quality is relatively a subjective thing. So Active fund managers are very good at identifying those things. What is the effect of political regime? What if the law changes? What if there is a new competitor coming into market? So all of those things, keeping that in mind, and macros and the future outlook, everything in mind. 80% of our AUM is parked in 75 names, right? So let's take advantage of that. Let's not try to make our machine an expert on all of those front. Like I can say कि यार मैं बड़ा होशियार बच्चा हूँ, मुझे मैं बीमार पड़ता हूँ तो फिर भी मैं मेडिकल की बुक पढ़ लूंगा and then I can do my own treatment. That is not fair, right? I go to a doctor or a specialist, right? Similarly, our starting point or the universe of stocks where our machine will start hunting portfolios for will be a combination of those 75 names. So 75 our strongest conviction, 75 maybe ICICI, 75 maybe Kotak, 75 maybe DSPs. If I take a superset of all of those, of course there will be common names and there will be some different names, right? So I arrive at 350, 400 names. So that is the starting point of universe where I'm using active managers insight, as in where are they investing today. So
So
I'm
you mean
not
to
taking
say,
you
you
to
mean to say that you will, the first part, सबसे पहले आप 10-15 एएमसी के जो टॉप होल्डिंग स्टॉक्स हैं उस यूनिवर्स को आइडेंटिफाई करेंगे और वहां पे आप अपनी आर्टिफिशियल इंटेलिजेंस को यूज करेंगे.
Right. So one more thing also I want to clear: it is not artificial intelligence and machine learning we are using. Our algorithms are proprietary and not some third party algorithm. And why we are not using it? Why artificial intelligence and machine learning is more important? Because then the average person thinks like just using artificial intelligence gives us a leverage. Actually, like I said, जहाँ पे जिसकी expertise वहाँ पे उसको use करना होता है, right? So artificial intelligence is very good at hunting black box kind of a pattern. Like there's an input layer, like, for example, we don't understand our own brain. I'm making this kind of gestures, but if I ask a biologist how exactly what neurons are firing, what chemical reactions are going on in my brain, he may not be able to tell me 100%. Similarly, artificial intelligence has that black boxing at the back end, right? But what is different between humans and machine is we also have a conscience or a wisdom that is sitting on top of that black box that is making that guiding everything.
Beautiful.
Machines
Yeah.
don't have that, right? So that is why we are not comfortable with going black boxing. So any sort of thing that we have done are from first principles approach, from very fundamentals. This is what we have to build, and that is how. So we are navigating this world of complexity with timeless simple principles of investing.
Nice. Tell me something. बहुत बेसिक क्वेश्चन कर रहा हूं आपसे. लेट अस से आपने किसी स्टॉक में इन्वेस्ट किया इन द
जी
बिल्डा क्वांट फंड
जी
और वो स्टॉक आप अपने दूसरे पोर्टफोलियोज में भी मेंटेन कर रहे हैं. लेट्स अ बिग बैंक और अ बिग आईटी कंपनी एंड
right
यू गेट अ सिग्नल इन योर क्वांट फंड दैट दिस स्टॉक नीड्स टू बी सोल्ड.
right
कितना इम्पैक्ट होता है एज अ फंड हाउस दैट व्हेन यू आर बाइंग और सेलिंग अ फंड इन अ क्वांट बेस्ड फंड? Is the impact of buying and selling affects the other portfolios also, or they're completely independent?
Right. So here it will be completely independent, irrespective of the other funds. However, not in terms of portfolio, but in terms of the scientific disciplines that we have in place, we can also leverage that into our other funds. There's nothing is stopping us, right? If we have some system or some technology, we can change that. It is not like कि इंजन से केवल मोटरसाइकिल ही चलती है. इंजन से हम अपना मोटर चला के पानी भी भर सकते हैं टंकी में, राइट? So there is nothing that is stopping us from using that technological advantage in other funds, but it will not be like since our quant fund says sell it, so we will sell it from rest of the fund. So similarly, there will not be intervention like all of our other funds are not positive on this maybe particular stock and it is coming as a buy in our quant fund, so we will not buy it. So there is no kind of subjective intervention. There is no overflow or underflow.
Okay. If our audience has a question, please write me in the Q&A box because I have only two more questions to ask you, Karthikeyan. Uh, of course, because do you expect this to be a higher churn portfolio, which will incur more cost?
Right. So it will not be as high churn as a pure momentum kind of a portfolio, let's say, right? But it will not be but its churning will not be as low as a fundamental portfolio, fundamental fundamentally run any active fund, right? So it will be somewhere in between. But we are not. But when I'm saying it's somewhere in between, we don't want to depart from the principles of investing, which is identifying companies and then staying them into them for a longer period of time, right? So we also want that. Thus, we also want to change our portfolio on a relatively faster basis. Like if I may give an example, मेरे हाथ में घाव होता है, some cut happens in my hand, and I apply some मरहम पट्टी लगाता हूँ, and I'm waiting for it to कि सूख जाएगा, and it will heal in some time. But if it doesn't heal, if I need to operate, I will operate at the right point in time rather than waiting for it to heal, so that the septic can spread into my whole hand, and then my whole arm needs to be chopped off. So a reasonable frequency of churning or reshuffling would be there. On an average, if I can say, in a year, 100 to 150% is the level of churning that we will be having, but it will be much lower compared to, if I say, quantamental fund, which has 400 500 level of churning in a year, and it will not be as low as any fundamental funds like 20 30 or 40% churning in a year. So we will be reshuffling, we will be moving money at a faster pace, but not as fast, so that we are constantly.
Okay, so this is my final question. There are some interesting question which I will ask you. कुछ पूछूंगा मैं आपसे. Do you think we are moving towards machine-based investing, artificial-based investing in the future? Do you think the fund management industry is moving towards these kind of products?
Yes, absolutely. This is the future, so to speak, in terms of even the inflow. I mean, the more and more money will come into asset management industry as a whole. I mean, that is a different thing, but that flow will be disproportionate. It will not be proportionate, equally proportionate between active and passive and quant based. So, for example, if I take example of USA, more than 70 80% is in non-active products, which are passive and quant based products already. So we are getting there somewhere. So in India, the kind of rule is reversed. More than 80% is inactive and less than 20% is passive in quant
This is
products.
quite interesting to know this. Thank you so much. So there are some very interesting questions. What do you expect to be the average holding period? Sushil Maheshwari is asking this question. What do you expect of average holding period of a stock?
Right. So, if I may take an example, when we are selecting a player into it, it's like selecting a player into our sports team. So, as long as the player is doing good, we don't have a problem with playing them for the longer period of time. Sachin can play up to 42 years as long as he's willing to, right? As long as he's performing, right? Similarly, there is no holding period, a limitation on holding period of a stock. If its stock is good, we will be holding on. For example, in backtested period, if I backtest my NAV from 2005 onwards, there are some stocks which I have held for more than 10 15 years, right? Like SDFC, Asian Paints, and all, and some name, Bajaj Finance. I would be holding on for more than 10 years in my backtested period. Whereas some stocks I will be holding for less than even a year, right? So it all depends on what is the stock's relative relative signal strength compared to the peers. So if it is continuously coming good, we don't have. I mean, in fact, that is what we are looking for, right? To stay invested for a longer period of time.
Nina ji is asking, what are the two major advantage and two major disadvantage of quant investing?
Right. So first of all, major advantage, I would break it into how it handles actives disadvantage and how it handles passive disadvantage, and that is where the advantage of quant is actually. So active का disadvantage जैसे कि मैंने बोला कि is the greed and fear, the subjectivity bias और the experience based bias. जैसे बोलते हैं दूध का जला भी छाछ फूक के पीता है. अब छाछ को फूक के पीने की कोई जरूरत है नहीं, बट एक्सपीरियंस हमारा खराब हुआ था क्योंकि दूध से जल गए थे, एंड दैट इज व्हाई द रीजन वी आर डूइंग इट, राइट? सो जैसे पैसिव का एक्टिव का अपना एक ड्रॉबैक है, दैट द ह्यूमन इंटरवेंशन और द सब्जेक्टिविटी ऑफ ह्यूमन कैन सम टाइम मेक अस लूज द अपॉर्चुनिटी. सिमिलरली पैसिव ड्रॉबैक, पैसिव हैज की ठीक है, वो भी रूल बेस्ड है, वो भी फैक्टर बेस्ड है, बट फर्स्ट ऑफ ऑल हु, लाइक आई सेड इन द फर्स्ट थिंग, दैट इवोल्यूशन की इवोल्यूशन कैसे होगा उसमें, आई डोंट नो हु द पर्सन इज that we are handling ultimately our money, who is taking care of ultimately the places that our money is invested. Now second is that they have a dynamic, they don't have a dynamic rebalancing scheme, they have a static rebalancing. Static rebalancing as in, for if I take example of NSE 200 momentum 30 ETF, जून एंड और दिसंबर एंड में रीबैलेंसिंग होती है. नाउ देयर इज नो साइंटिफिक रीजन कि जून एंड एंड दिसंबर एंड इज द राइट, इज द बेस्ट टाइम टू रीबैलेंस माय पोर्टफोलियो, राइट? सो and plus that it's एक हफ्ते पहले in advance that portfolios will get published on NSE website to the whole world to see, right? So I as a third person can front run the ETF manager and buy those positions because I know on that particular day he has to buy it. Similarly, everyone is buying and selling on the same day because of that one day rebalancing, and because their only role is to reduce tracking error and replicate, right? There is no third party, there is no third role to it. So because of that, that impact cost would come in. I did a study on how much is how much return are we losing out in these ETFs because of these things, and it turns out 25 to 30 basis point return is going per rebalance for no reason on an average because of this one day rebalancing thing. Now, third aspect is the disaster management, right? Disaster management is, for example, some stock in my ETF has something terrible happens to it, some corporate action or something that for the reason for, and I know as a fund manager for sure that this stock is going to hurt us, and let us sell it and get out of it quickly, right? Let us operate this wound before it becomes a septic. But I can't do that because if the ETF manager would be only changing when there is a change from NSE rebalance portfolio, and that the person or whoever is handling that NSE 200, making that 200 momentum 30 portfolio, he might be waiting for that rebalance period to come, right? सो आग अपने घर में लगी है और मैं पड़ोसी का मुंह देख रहा हूँ कि पहली बाल्टी वो फेंके पानी की, देन आई विल बी टेकिंग एनी एक्शन. दैट डज नॉट मेक एनी सेंस. सो on these are the limitations of passive, which can be handled very well by having active framework and without taking any departure from, I mean उसका benefit भी use करना है. Like I said, I'm using the bets of the active manager as my starting point of the universe. तो मैं उनका एक्सपीरियंस यूज कर रहा हूँ, उनका इमोशनल जर्नी या जो भी एक्सपीरियंस का ड्रॉबैक है वो कट कर रहा हूँ. पैसिव का जो साइंटिफिक तरीका है, जो डिसिप्लिनरी अप्रोच है, जो रूल बेस्ड, वो यूज कर रहा हूँ, और उसकी जो फ्लेक्सिबिलिटी की वजह से ड्रॉबैक है, दैट आई एम कटिंग ऑफ, राइट? सो की ये हमारा हो गया बेनिफिट. व्हाट इज द मेजर बेनिफिट ऑफ क्वांट बेस्ड इन्वेस्टमेंट? नाउ व्हाट इज मेजर ड्रॉबैक? मेजर ड्रॉबैक वुड बी in case, now of course there would not be 100% accuracy in each thing. Like people are if people are expecting कि machine based है तो हम सारी चीजें advance में predict कर लेंगे. Like I said, we are not trying to predict future, we can't predict future. We have a systematic discipline in place that gives us repeatability, confidence in repeatability from probabilistic point of view. Now of course sometimes our bets will not play off, and we have a product which is very different from the benchmark. It is 80% different from the benchmark because if I am not taking any excess return, if you look at our volatility, we are not taking any excess return. We are giving outperformance not only in market up but also market down, and our starting point is the same universe where the active bets are playing on, right? So someone can ask where the superior returns are coming from. Our superior returns are coming from because we are taking much differentiated positions from the benchmark. We are sector agnostic. If banking sector benchmark has 30% weight in banking and our model says there's no banking in it, then there's no banking in it. So we need to be different from the benchmark in order to beat it. And when our bets, when the odds, when our bets are not working, that 30 out of 100 times, and simultaneously we are very different from the benchmark, and benchmarks bets might be working, and that is the time where it can be a time of unease. Like because कि लोग देखेंगे कि यार बेंचमार्क तो 2% ऊपर है, हम 1%
What is the
डाउन क्यों है
benchmark of
on
this
this
one?
particular
What will be the benchmark?
NSE 200 total return index,
NSE 200 total return. Okay, all right, all right.
right?
So there is a couple of more interesting question. How much XIRR one can expect in this quant-based investing portfolio?
Right. So actually, like I said, return and volatility is our byproduct. So it would be kind of asking ki, how much are you expecting to score in the exam? I would rather say we have our plan in action. We have our preparations in place. We are expecting to do better. If the questions come good, we will be playing good. If the questions come very difficult, then we might be not performing that good. But in terms
All
of
right.
numbers, if I can say, so
I
that is
know.
that is not a fair thing to say.
What
But
do you think
when
will be the... Sorry, sorry. Please go ahead.
right. So, but in probabilistic terms, if I say if the market is up, we are uh, we are more likely to generate alpha and on a significant level compared to the benchmark. So if I look at a 3 year rolling horizon, if I can show one of the slides, uh, if I may,
Yes, please.
that that may be
And Mr. Praveen is also asking, what will be the bias towards large cap, mid cap, multi or small cap?
right. There seems to be some problem with screen sharing,
Okay.
but yeah. So yeah, sorry. What was the second question?
What is the bias in this fund? Large cap, mid cap, small cap?
Right. So it will be primarily large and mid cap only. So our starting point is that core 75 bet and combined with the large and mid cap space. So roughly 55-60% it would be large cap, 40-45% it would be mid cap. And that is where our product placement is also there. Like it is, like I talked about, where the returns are coming from without taking an excess risk, is the that we are 80% differentiated. Now we are 80% differentiated and we are largely in large and mid cap. So, from an investor's point of view, where this product fits in is if someone is looking to make a better return or a diversification, significant diversification. So, a new investor as well as the existing investors, which are looking for diversification kind of a thing. So, there is a perfect product to get into. For example, if I say I have a large and mid cap fund. I have in Birla a large cap, multi cap, flexi cap, any large and mid cap oriented kind of fund, and I'm looking for diversification. Now I will go to maybe another AMC, another fund manager, and take their bet, buy some into their large and mid cap funds, and I will think that okay, my bets are diversified. What is happening actually is both of them are benchmark hugging. Not more than 20-25%, 30% differentiation is there, where it is 80% differentiation here. So both of them are benchmark hugging. So by buying into those both funds, what I'm doing is I'm making the number of stocks that I hold in my portfolio bigger, but I'm not like getting the diversification benefit to the extent that I wanted to, right? Whereas this is 80% different. So here you will actually see that diversification benefit on top of that alpha generation.
Fantastic. I think that is all, and very, very interesting conversation. Thank you so much, Karthikeyan, and we'll catch up soon with you again for another event. And final question from Mr. Virendra: Why Aditya Birla Capital AMC for quant investing?
Right. So, like I said, ingredients उतने ही हैं and recipe basically जिनसे बना रहे हैं तो factors उतने ही हैं. The number of factors are limited. The sign it's the approach and the discipline, right? I have that confidence to take that bigger bolder bet. Some might not have that confidence to take that bigger bolder bet. So what I'm saying is the ingredients are the same. Uh, Still, some chefs are preferred over others, right?
Yes.
So if someone can say that quant based investing does not work, because 6 out of 8 quant funds that are there in the industry, if you look at their performance, it has not worked out. So coming again from the chef angle, if you look at my prior product, which was Kotak Mutual Fund, का quant fund. So Kotak quant fund, if you look at that performance in the last 1 year, more than 30% alpha. And अभी एक साल नहीं हुआ है, but in the up market, more than 30% alpha has been generated, while other quant funds were failing to do so. So, like I said, the ingredients were here, but it is the chef that matters. And we have not only launched a quant product that okay, we got something in mind, we got a product in mind, and let's go to market with it. Before coming to any kind of product, we have ट्राइड एंड टेस्टेड, मतलब हर चीज को घुमा फिरा के बहुत अच्छे तरीके से देखा गया. लाइक इन आवर प्रेजेंटेशन, if you look at the main picture, we have a cockpit overview. So what there we have taken example of autopilot. Ki autopilot is also leveraging technology, and you will be surprised to know कि 1 सवा 1 घंटे की फ्लाइट में, in 60-72 minute flight, only 2 to 3 minutes of manual flying time is there. Rest of the time it is automated. So before going for that autopilot scheme of thing, they would have tested that autopilot. लोगों को ऐसे तो नहीं बिठाया होगा, because one thing for sure, people value their जान की ज्यादा परवाह होती है than compared to money. So if lives can be managed in a better way, of course the wisdom has to be there. the handling. So we have to know that what it is that we are handling, and we did extensive research for 2.5 years before trying to mix anything or make anything out of it. We have to know what is it that we are dealing with. So from coming from all those fronts, we think we have a significant better understanding or control than there is than the wisdom that is out there in the quant
We are sure
field.
about this. We are sure about this, and all the very best to you as well as Birla Mutual Fund for a successful product. Thank you so much.
Thank you.
Thank you
Thank you
so
so
much.
much.
Thank you so much.